Awesome. Hello, everyone. So in today's stream, we are going to go ahead and follow up on all the stocks that we talked about in our previous stream. And we are going to go ahead and find some other companies that we might be potentially interested in investing into this upcoming week. So let's go ahead and start off with CIM. So the CIM company was the very first one that we were able to find last week. And yeah, so it's showing a lot of signs of reversal right now. So the company had lost about, let's see, about 71% of the value of its shares over the past year. But then overall, it was able to recover 65%, not of the previous amount that it ended up losing, but just overall 65% up since about 50 weeks ago. So this company has been doing really, really well, especially considering the fact that it's uh, considering the fact that it has been able to recover very, very well over the past year or so. It's currently trading above 15-day SMA as well as 20-day SMA line. So 180-day SMA line, which is the green one, and that 20-day SMA line as well. So we can see a lot of consolidation on the MACD indicator, but both of the indicators are pointing up on the green. We had just broken through the resistance right here, so it looks pretty promising. So let's go ahead and warm up with this one. And yeah, let's look at some other indicators as well. So another catalyst that ended up pushing this the stock value above the resistance, which we can see right on the middle of the screen right here, was the earnings report. So all the way through the last year, they kept reporting their earnings, and the earnings were positive, which is great. So the company reported 29 cents on the dollar of earnings, which is great. So we'll continue monitoring this one for a while now, and let's go ahead and check out if the company pays any dividends. So CIM. And again, the goal of the stream is to find as many as we can companies that are undervalued that bring some passive income, which awesome. So the very first company that we looked at is fantastic. So 10.57% of dividends that they pay every single year, and they have been positive. So fair evaluation based on Yahoo Finance, but again, this doesn't necessarily mean that we're not going to continue going up, and this might potentially change in the future, but I don't tend to trust these ones too much. I just do my due diligence and figure out their balance sheet and do a lot of technical analysis. So before we move on from this one, let's go ahead and see if there are any other lines of resistance or lines of support. So there's one that can be drawn right here. Can we say that this one is another line of support? I wouldn't say that this is a very strong one. This is kind of like a trend line. So we'll just go ahead and move on to a different one. But CIM is definitely on our radar. I believe I ended up buying some shares on a different account. This is my trading account. That's why you don't see any shares being bought on the right-hand side. But yeah, so CIM is a real estate investment trust fund that pays 10.51% in dividends. So that's a very good one. Let's go ahead and look at MFA. So MFA has been my favorite one over the past couple of months. It has been reporting positive earnings, I believe for the portion of the year. So let's check MFA. Yeah, so they have been reporting positive earnings twice over the past 52 weeks, and they have an earnings report that is coming out soon. Oh, actually, right before we go to MFA, I want to go to CIM again, and I want to set up our alerts. I definitely want to follow up on this one next week and see if there's going to be a potential for adding up to the position. So awesome. We're going to set up one that is slightly above the 15-day, the 20-day SMA line, and we ended up setting another one up above the current trading price. So that's awesome. The next one is going to be at the level of 180-day SMA, and we're going to set one up right here, which is at the next resistance. Perfect. At or above. Fantastic. Another thing that I really like, by the way, about this company is that over three last years, they used to consolidate and trade around $18 or almost $19 a share, and right now it's currently creating this upward looking a flag pattern, and it's just breaking through the resistance. So definitely a lot of upside for this stock. So 42% till the next major resistance. So that's awesome. Let's go ahead and move on to the next one. And again, if you guys are watching this live, don't hesitate to leave a comment with the stock that you want me to break down, and we're going to do so. So yeah, let's move on to the next one. Excuse me. So MFA. We talked about MFA last week. So 7.59% in dividends every year, which is awesome. So it's a very similar pattern that they follow as well. Over the past 3 years, right before the Rona situation happened, the stock used to trade at about $7.40 a share. Right now, it's building up another very strong resistance right here, and has about 50% more upward potential. This can kind of remind us of a cup and handle formation. So once we see that it starts to make higher highs and continues to trade above 20-day SMA, then we can use that as an indicator for an uptrend. So definitely a very, very good stock. And the next thing we're going to do is look at 1 year. Perfect. So again, it's trading above 180-day SMA. It's trading above 20-day SMA. Both of them are pointing up. MACD indicator is perfect, so it's consolidating right now. We don't see too much upward pressure on the RSI indicator as well, so that's awesome. So as you can tell, there was a lot of trading down right over here in this area, but the stock has been doing pretty well ever since then, so I didn't exit out of my position. So that's awesome. And yeah, let's go ahead and see what else we can discuss. We haven't discussed Gopro in the last stream, but I definitely want to follow up on this one as well. So Gopro doesn't pay any dividends. Over the past 5 years, it has been pretty much constantly going down, except ever since June 29th in 2020. So long term, Yahoo Finance says that after 9+ months, the price is supposed to be a little bit higher than it is right now. 1 year target for this company is 9.47, which is about 17% higher than actually about 20% higher than the current price, which is awesome. So let's go ahead and look at slightly different chart. And by the way, valuation of this company is $1.21 billion. So it's a small cap stock. So as long as it's below $2 billion, it would be a small cap. So let's go ahead and Gpro. Let's see if there's a way for us to swing trade this one. Okay, so they had the earnings conference call that ended up triggering the price to a downward trend, and it had fallen by 23%. That is incredibly insane. So at this point, we can see that Gopro ended up falling below a very strong support trend line, and at this point, it seems like an inverse cup and handle. So these kinds of formations, they tend to continue to go down all the way at least to next resistance, which is probably going to be at around this level right here. So next thing that we want to do, and actually we talked about this in I think 2 streams ago. We talked about how we don't want to hold it over this conference call, which was the right decision to make. So that's perfect. So the ones of you who ended up taking advantage of that, that's fantastic. So one thing I have already done is I've already set up 4 different alerts for myself at the key points, at the key levels, just to make sure that if the stock continues to trend down, I'll take advantage of it a little bit further into the game. But for now, it's not the best deal. And this is something that I tend to look at myself if to make sure that, hey, this is not the best deal right now. So at this point, I'll say no to the stock, at least from a buying perspective right now, from a swing trader perspective or an investor. But for a future, obviously, this is a very well-known brand. A lot of people use it, and I don't see it going out of the market anytime soon. So as long as it doesn't become a target of manipulation, I think we're going to be good to go for a long-term stock. So that's perfect. All right, let's go ahead and check their statistics. I definitely want to see how much money they have available. So market cap about 1.25 billion in 2020, 1.23 current, and then we have, okay, so we doubled the valuation ever since September to December of 2020, which is very, very impressive. And okay, yeah, so we see a lot of volatility over the quarterly reports, basically. Interesting. So I think that this has changed recently, where it's just reporting our quarterly market capitalization overall information on Yahoo Finance, but I'm pretty sure it's sec.gov that we can go to. There we go. And right here, we would go to, let's see, Division Office of Corporate Finance. Actually, let's go ahead and yeah, there we go, company filings. And then we can go to, let's check for ticker symbol. Which one did we just looked at? GoPro, Gpro. And once you type in 10K, we can actually get that 10K report as soon as it refreshes it here. Let's go ahead and search for it. There we go. So this is the most recent one. So once you click on the interactive data, that's going to get you to the page where if you click on financial statements, you would be able to see the financial statements of how much the company has on their account, so checks and balances, basically just consolidated balance sheet available for you for the past 2 years, which is awesome. And you can actually go back, I think, 2 screens and look up previous 10K reports, but this is just for the fundamental valuation of the company. So if you're just basing your decisions off of the technical analysis, and again on this stream, we're most likely going to be focusing our attention on the technical analysis. So for now, we're just going to continue with that. But yeah, definitely a very, very good tool. And I'll zoom in just so you guys can see a little bit more here, because I know the resolution is very high. But yeah, definitely go to search and then search for the company's ticker symbol, then company search, and then the current page. So 10K reports on sec.gov, sec.gov. Perfect. Let's go ahead and go back to Yahoo Finance and see what else it suggests for us to look at. So Snapchat, we haven't looked at Snapchat, I think, for a while now. So 1 year valuation. Okay, so way overvalued over the past 5 years. The price had gone up from, let's see, 2018, $5.51 all the way to $61 a share. I have my own thoughts on this, but I don't think I'm very much favorable of Snapchat, just because they have so many advertisements. I'm sure that they make a lot of money off of that, but it gets really, really annoying because you cannot spend basically any time in Snapchat. You just get bombarded with advertisements, can't even finish one story. So that's just my point of view. But so 5 years, wow. Okay, so Roku is doing fantastic. So we'll just leave it at that. Let's go DocuSign. Okay, I know that this one is doing very well. Wonder what about Zoom? Okay, so Zoom seems to be building up some support at around $380, $340 valuation per share, which is awesome. So let's go. Shopify is way up. Let's see, year to date. Shopify is at $1,455, $177 billion valuation. That is insane. Just insane. Wow. All right, let's see. $69 billion valuation. No. Again, a lot of these companies are just way overpriced. So $37 billion valuation, all-time high right now. Would be very hesitant to investing into some of these companies. And again, the things that I tend to focus on these streams, as well as just my personal finances, is whether it would be a good time to buy right now. So if you don't see a lot of value in something that might potentially continue to go up just for a little bit and then go down, there's a lot of air and not a lot of support, then I don't tend to take advantage of that unless it's a very unique developing technology. So that's just me, just my perspective. But hey, make sure to do your own due diligence. I'm not a financial advisor, just a little plug in here. And let's go and move on to a different one. Wow, we cannot really find anything. What if, and by the way, if you guys have any ideas for the stocks that we should break down, just let me know in the comment section. and we'll definitely do that as well. But for now, let's go ahead and follow up on the ones that we talked about in our previous stream. So Fizz. So Fizz is a very interesting one. I definitely know that it had grown a lot, but it had also came down from the spike that it was at before, which was $151 a share, $5 billion valuation. Very, very impressive. The stock is doing fantastic, especially over the past 5 years. It had grown tremendously. So 5-year chart, you can see right here. It was back in 2016. It was at $44 a share. Then it was trading at about the same price back in end of 2019, beginning of 2020. And then ever since then, the price just took off, absolutely took off. So that's very impressive, very, very cool. The stock is considered overvalued right now, and I would have to agree with this valuation, except the part that I would want to see this stock to go down to the previous prices of about at least $80 a share, at least to these high peaks, because that seems to be building up a very strong support right here. So if we see this again, kind of like inverted cup and handle formation, if it continues to go down, I would definitely want to follow up on this one. But in order for me to do that, I'll go ahead and set up my alerts for now. So I have alerts set up above this trend line right here, which is not extremely accurate. So we're just going to remove this one. So we'll build up a better one right here. Let's see if this is better. No. Let's do this one right here. Can we say that this would be a better trend line? Perfect. Okay, so that actually shows us so much more. And what do we have here, by the way? Split 1-to-1. Let's go ahead and check this out real quick. What do they have going on? Our menu offer. Are they planning on doing a split of their shares? National Beverage now 1-for-1 stock split. National Beverage announced a board of directors declared 1-for-1 split in the form of stock dividend. This dividend will be distributed on February 19th to shareholders of the record of February 16th. Trading will begin on a split adjusted basis on February 22nd. Interesting. So per share, okay. So over the past 20 years, Fizz holder, so 88 times after $6 a share dividend, 20.56% or nearly $1 billion. Let's see. Actually, let's check out and see if 90-month 2-for-1 stock split. Interesting. 2-for-1, $109 a share. That might be very interesting. If this builds up again a new support at this $100 valuation that it was trading at before in 2017, 2018, this might actually be a good opportunity to buy. This is not something that I would want to miss out on, especially if they have a split. Usually the stock splits, not a reverse stock splits, but the regular ones would have a positive correlation with the price of the stock, which is great. Unfortunately, they don't pay any dividends, but I'm thinking that this has something to do. Yeah, they definitely pay dividends. So I think what this has to do is with the split. So I think once they split, then they should start paying out the dividends, because I'm pretty sure that they used to. So, but yeah, again, if you have any ideas for the shares of the stocks that we want to break down, just don't hesitate to leave a comment in the comment section below. We'll definitely do that. I'm very excited about this stream. We're definitely gonna find a lot of good stocks today. I'm gonna roll. I'm feeling pretty good about this one. So create an alert at or above. That's good, and we'll definitely put one right below just to see if it's going to continue to make lower lows at or below. Fantastic. All right. Let's see what's next. What is next? One target valuation. Let's go ahead and check out the next one, which is going to be MITT. So this one is a real estate investment trust fund. Again, what a fantastic growth. 12.77% dividend every year. 5-year chart looks fantastic. The only thing I think MITT is one of those stocks that hasn't recovered yet. There are a lot of different companies, a lot of real estate investment trust funds that ended up recovering ever since the beginning of the Rona situation. But this is one of the stocks that I think I might actually still be losing a little bit on this position. I'm not sure, but it has not recovered yet, and I think it might be a good opportunity to look into this one and potentially buy it next week. So MITT, pretty sure I'm supposed to have it here added somewhere. I do not. Wow. Yeah, I'll definitely have to add that one. We definitely don't need DGAS or UGAS anymore. All right, so MITT. Interesting. For some reason, I don't even have alerts set up for this one, but yeah, definitely will set up some alerts. What a fantastic setup. So we can see that our RSI indicator is pointing up, right? So we have this trend line right here, kind of like a support line, and it's going to coincide with a support line almost directly right over here. We have earnings report that is going to come out soon. So I don't really like holding it over the earnings report, but in this case I might just have to take advantage of that. It reports on the 19th, just because the valuation of the stock is just so under market value in comparison to some other competitors. So 84%, so the stock price ended up going down by 84%, and ever since then it was barely able to recover anything. So it's gone up by, well, it says 128%, but that's if you ended up buying on the very dip. So percentage-wise, yes, it has been able to gain a lot, especially with the volatility that it had before. But on the 1-year chart, like on the 1-year chart, on the 52-week chart, we can see that it's currently finally started to trade above the 20 and 180-day SMA line. So that is awesome. We're going to go ahead and zoom in on this one real quick. So 180 days. We'll definitely want to see it start making higher highs before we take on the position. So this would be another pretty strong support line that was confirmed 3 times. And again, the price of the stock used to consolidate at about $3.10 a share, right? So closer to 180-day SMA line, right around here. Let's see how much money can we lose if it goes back to the previous strong support. It's about 17%, and again, next growth and the next resistance is going to be 20% up. So with that mentality, I would definitely want to follow up on this one in the future, and this seems like a great company. So very much undervalued. So in my opinion, and again from technical perspective, don't trade based on somebody else's opinions, don't trade based on my opinion. I'm not a financial advisor. This is just something that we're doing together as a team just to make sure that we're building up a decent list of stocks that might be potential buys. So at or below, and let's go ahead and set up another one that is going to be right around here. Create an alert at or below. Fantastic. All right, awesome. And let's go ahead and see when the earnings reports are. 19th. Okay, good. Yeah, we'll definitely be following up on this one soon. So let's see what else is new. We have 12% in dividends. That's awesome. That is fantastic. Let's go ahead and see what else is going on. So we've already checked out the sec.gov. I think now it's time for us to look at some other companies that are undervalued. And again, if you have any ideas for the stocks that you want me to review, to break down, just go ahead and leave it in the comment section below or on the side, wherever you see it on your screen right now. So the next one is going to be RCL. So RCL is a very good stock in regards to the technical analysis. It shows a lot of potential, and it still hasn't been able to fully recover from beginning of 2020. So this kind of stock is it's a mid-cap stock, so it's under $50 billion valuation, so it's at 16 right now. A 1-year target is at $70 a share, which is not that much higher. It's only about 4% higher. I would not be very interested if they keep this as the current 1-year target, but in regards to the price that it was trading at before, it basically shows us about 50% more of potential growth for the stock. So RCL, let's go ahead and check this one out again. RCL, All right, how come these trend lines? For some reason, I feel like some of these lines just um, don't properly line up. So for some reason, once I close it, it just adjusts it. So we can see definitely a lot of consolidation at around this level. So it has been confirmed. Let's draw a line right about here. Right, so this line right over here was able to be confirmed as a sign of resistance, 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 and then again support, support, and then once it broke through the support again, a lot of consolidation going on. What do we have coming up here? So we have earnings that are going to be coming out here on the 16th, which is crazy. A lot of these companies are reporting their earnings kind of like at the same time, so it's going to be a very, very big week for us. And one thing that I definitely want to do is, again, somehow I'm very surprised that I don't have any alerts set up for this one. So we're definitely going to go ahead and create some alerts here in a second. So let's remove this one first, and let's create an alert that is slightly above the current trading price at or above. Then we'll definitely create another one above the next resistance line at or above create. And we'll definitely be following up on this one if it continues to go down to see how low it's going to be able to go for us to buy more shares. So, and again, I'm not a I'm not a day trader. I'm more of a long-term investor or a swing trader. But again, my swing trades are at least from 3 weeks and higher up. So in this case, we do see a lot of movement within these kinds of legs of move of 87 days. So it's usually a multiple of 3. You have about 30-day moves, 90-day moves, then you have 120-day moves, and you obviously have those 300-day moves. So in this case, we had what was that? 100 and so just 86, 87 days. So just about 90. And this is about the same. So 91, 92 days right here, another bottom, right? So confirmation of a support right here. So all these techniques you'll be able to kind of gather once you look at these charts for long enough. But in this case, the company has been reporting earnings for a while and they have been negative. So we'll see what this earnings report is going to show us. All right, perfect. Let's go ahead and check out RCL on the Yahoo Finance again real quick. So max chart, so you used to trade at about $38 a share. So this is where the next major support would be for us. So about 43, 48. We might see some resistance at $70 and $72 a share. So we're going to have to be on the lookout for that. Let's go ahead and zoom out and see if it's trading above 180. No, okay. So a 3-year chart gives us a very slightly different perspective, I should say. We have about 30% upward trend, upward potential on the current stock rate price. Actually, a little bit more than that, almost 40%. And then it has about 20% down. So we'll definitely want to see if it's going to break through this very strong support trend line. And if it does, then we're definitely going to have to make up our mind and see if we want to decide to buy this one or not. But again, the company has been reporting positive earnings for a while, at least from this chart. And we can see that the price was about $120 a share, 115, and currently trading at slightly about 40-45% lower than that, and yeah, definitely has a lot more room for improvement. But we definitely would want to see this the earnings report to at least be positive, hopefully be positive, but at least smaller negative numbers here. So the company would show us that it's not losing too much money. So this is just one of those cases. What else did we want to check out? So the company doesn't pay any dividends right now. I'm pretty sure it's just because of the financial problems, financial hardships that they're going to face. But again, I think we'll find out a little bit more on the 16th of this month. So we'll definitely be, again, following up on this one. So that's awesome. Let's look at United. Yeah, let's look at American Airlines and United Airlines and just overall the airline industry and see what we can find. So we have a 5-year chart. Okay, so 5-year chart. The United Airlines used to trade at $92 a share. Then the price ended up dropping down to $28 a share and has not been able to recover just yet. So $43 a share. So doesn't pay any dividends. Overall, ever since 2006, the company has been doing a pretty decent job growing. Actually, after the financial crisis in 2008, it had been able to kind of make a floor at about $3 or $4 valuation, which is crazy low. And then ever since then, it was able to recover and trade at 300% valuations, actually 3,000% valuation. So that's awesome. So from $3 all the way to $90, that is very impressive. So again, if you guys have any ideas for some of the stocks that you want to discuss, don't hesitate to leave a comment. I'll be happy to discuss those and we can break those down as well. So the stream is probably going to last, I don't know how long we should do this for. At 7:28 Eastern time, we're definitely going to be doing this on the weekly basis. And if you guys have any other interest in some other days, we can schedule those as well. But for now, it's every Sunday at 7 p.m. Eastern time. So don't forget to smash that like button below, and don't forget to subscribe to the channel. Turn on that notification bell so you can see when I go live, because that's all we do on this channel is we try to find value in the stocks, the companies that have a lot of potential for upward trading. Again, I don't scalp. I don't really day trade any longer. And I don't think I'm going to get back into it, but what I want us to do is I want us to find these companies. We're going to create an account that we're going to be investing into and following up on the weekly, probably most likely daily basis. And we're going to be holding on to the stocks for a while, which I think is going to be very beneficial. And I feel like there's a lot of day trading going on around, and I do find more value in long-term or swing trading. That's just, again, my perspective. So American Airlines, let's go ahead and check the American Airlines out. So we talked about this one during our last stream. So they're still reporting negative earnings, and they're facing a very, very strong resistance right here. I don't know if you can see that. Let's go ahead and zoom in real quick. And before we zoom in, we can see that this very strong multiple year resistance line is approaching, right? And it's about 18% up from the current price. So let's go ahead and look at 180 days. Wow, yeah. So the price ended up spiking up. I wonder. Oh, it's because they ended up reporting lower earnings report. So the price ended up skyrocketing by 94%. That is insane. Went down back to $17 a share and consolidating. This is actually a very, very beautiful setup for the company. This ascending triangle, and that has been confirmed. This line was confirmed as a resistance so many times, so about 3 times actually, but those were like major multiple day moves. And once it broke through the resistance, it kind of like came back to the same exact price level and trading at that level right now. So for now, we're definitely going to follow up on all of these alerts that we have set up right now. But yes, definitely one of the undervalued stocks. So 1-year chart, we see the price went all the way from $20, $30 a share all the way down to $8.50, $8.25. It's about 70% lower than it was before. And again, this is a beautiful setup. So as long as we continue to see 180-day SMA line as well as the 20-day SMA line pointing up, then I would be pretty positive on investing into this stock. So again, we have our RSI indicator that is pointing up as well, not on the overbought, not on the oversold side, just around the middle, which is great. We have MACD indicator, both of the indicators are pointing up. We can see just a little bit of 20-day SMA getting a little bit closer to 180-day SMA on the MACD indicator, but again, this is not something that we should worry about until it crosses it. Once it confirms it as a support, breaks through the next resistance, we can continue potentially taking a position in the stock. So this is a very, very good stock, very good company. So again, don't trade based on somebody else's decisions. Make sure to do your own due diligence. So next, Southwest. Southwest was able to recover very well. LUV, I'm pretty sure their balance sheet was way better than American Airlines or United Airlines. Then let's see at CCL. Wow, yeah, so CCL is doing fine right now, recovering, excuse me, from all-time lows, but definitely a lot more room for improvement. The company is used to trade at about $45 valuation, which is about 110% higher, 115-20% higher than it was before. So at this point, we are just going to go ahead and set up our alerts. CCL. We already have some alerts set up, which is awesome. Okay, cool. So this is a beautiful setup too. So just like in the previous case, we have our very, very strong support that was confirmed, very, very strong resistance that was confirmed multiple times. Finally, once it broke through the resistance, it consolidated, went up all the way to $23 a share, which was about 28%, so almost 30% higher than the price of the stock at the resistance. And right now it's currently trading at about $20.60 a share. So a lot more room for improvement. I also really like the idea that 20-day SMA line and the 180-day SMA lines are both pointing up. And to me, that's just a fantastic sign. So we just went over the earnings report, and that ended up kind of pushing the price of the stock a little bit higher, but nothing, again, nothing major. The next earnings report is going to be in about a month and a half, so we don't really have to worry about it for now. All right, so we already talked about, did we talk about NYMT? I don't think we did. We already talked about real estate investment trust funds, and NYMT is the New York mortgage trust fund, so NYMT. And they pay 10% in dividends. The company seems to be undervalued on the technical analysis, but has been recovering very well, especially over the past 8 months. So ever since March of 2020, it was able to quadruple in price. But again, the regular price of the stock is about $6.29 a share. Over 5 years, it's about $6 a share. And once the Rona situation happened, dropped, and again is currently recovering. So we are invested into the stock, and we're definitely constantly following up on this one. I think there's still a lot more room for improvement, but I do believe that if we look at a 3-year chart, yeah, no, there's nothing really shown here. So we have a 180-day SMA line that is still pretty high up, so it's about 25% higher than the current price, and we have let's look at 1-year chart, and we have both of the RSI indicators, so 20 and 180 pointing up, and the price of the stock right now is currently trading above those, which is great. So let's go ahead and look at a 180-year chart, 180-day chart, and see where we can see the potential support or resistance. So we would definitely want to identify this line right here as a potential very strong support. So it has been confirmed as a support 3 times right here. And so if we see a lot of downward pressure on the stock, then we would expect it to either at least consolidate here or potentially bounce off of it and continue to go up. So that would be at least 50% of all the stocks that we talked about on our previous live stream. I don't want to repeat myself too much, so let's go ahead and go to which screener should we go to? FinWiz. Let's go to FinWiz, and let's go ahead and see what kind of companies we would be interested in buying into. So once we see some of the ones that are interesting enough for us not to jump into some sort of highly inflated, manipulated stock, then we're going to be fine. But again, if you guys have any ideas for any of the stocks that you want me to break down, don't hesitate to share that. And for now, we are just going to continue this live stream, and we'll see what we can come up with. So we have crude oil, natural gas seems to be going up. Well, natural gas ended up going up by 4% today. Impressive. And let's go ahead and click on triangle ascending. So I really like triangle ascending. We're going to go ahead and go scanning through some of these stocks. I'm pretty familiar with some of these ticker symbols, but we'll definitely go through some of them and see if we can find any of the ones that are valued at a reasonable price. So ISTB. Let's look at ISTB. So this stock doesn't have a lot of volume. I don't really like that. So these numbers are not very big, and I'm pretty sure that there's not a lot of, come on, click. Yeah, this is only a 7% move. So I don't remember the stock. We looked into this one before. So nothing too interesting. Go ahead and go to screener and market capitalization. Today I want us to look at mid-cap stocks. Let's look at everything that is above 10 billion. So $10 billion valuation, we have ourselves a good company. So let's look at over 3% in dividends. I do really like dividends, so we're definitely going to search for the ones that we can hold on to for a while. But again, if you have any ideas for any of the stocks, go ahead and leave me a comment in the comment section, and we're going to break those down. So let's see. Everything seems to be way overpriced, way overvalued right now. Nothing stands out too much. This one seems like it's creating a ascending triangle, and closed funds or financial. Not very interested in that one. Not a great deal to buy. Way too inflated. Header covered. Oh, what is this one? This one looks like it's about to drop. Real estate, Alexander's Incorporation, real estate investing trust fund. How come market cap is 1.35 billion? Did I not set something right? Market cap. Oh, I put under 10 billion. There we go. Actually, before we go there, I definitely want us to check this one out. ALX. I feel like this one is familiar. ALX. Yeah, so this one is an interesting one. So it has existed for a while, I'm pretty sure. We'll double check that on Yahoo Finance. But over the 3-year chart, we can see that the company has been dropping for a while. So it wasn't a very good long-term investment. But again, we have about 17 to 20% of upward potential for the company to go to with their stock price up until they meet the 180-day resistance line. But we don't really see. Well, I guess currently trading, it's trading at about support levels that it should be bouncing off of. But again, if the company is not going to do that, there's way too much pressure from this trend line right here. Actually, wow, it's actually trading above it, which is nice. Gosh, and double bottom. I feel like I'm convincing myself that this is a bad stock, but then I'm looking at the technical analysis, and it actually turns out to be okay. So we can see that the company is actually it was able to break through the trend line, which acted as a very major resistance. It had a double bottom, and I'm pretty sure that this this bottom was higher than the previous bottom, which is really nice. So what I would want to do in this case is I would want to set up some alerts, because I like the idea that the 20-day SMA line is pointing up, and 180-day line is pretty far away to act as a resistance. So we still have a lot more room for improvement. So in this case, again, I would want to set up my alerts at above and below. And the way I would trade this one is I would definitely wait for it to continue to make another kind of like a recovery. I would want the MACD indicator to start pointing up, because currently, excuse me, we have earnings report that is coming out that might act as a catalyst for the stock to continue to go up. Or actually, had this already came out or not? Yeah, so they paid dividends, but yeah, so earnings report is going to be coming out on Tuesday, so on 16th. If it acts as a positive catalyst, then we're going to see a lot of potential for improvement. If you look at a 180-day SMA line, they're both are pretty good. So the current price of the stock is trading above 180-day SMA line. But again, don't like holding it over the earnings, and I don't want to buy it on the day of the earnings. So I would want the price to, if it continues to go down as it does right now, over the earnings report, it might potentially tank to the previous lows. That's in the negative scenario. In the positive scenario, it would start making new higher highs. And once I see what it does, we're going to have ourselves a better strategy on how to trade this one. So that would just be my approach, and in this case, I'll go ahead and leave it at that. But mid cap, we're going to go ahead and do right now mid cap stocks over $2 billion. There we go. There we go. That's better. That is much better. All right. Let's see what other companies we have. There's this one, AEP. We had broken this down before. Yeah, this is a good company. We just want to know what exactly is going to happen because we have this inverted cup and handle formation, and we don't know what exactly is going to happen with the company once it reports their earnings here in a couple of days. I would definitely want it to start making higher highs, and then hopefully trade above 180-day SMA line. Here's another indicator that I don't really like. I don't want the 20-day SMA line to be trading below 180-day SMA line. That usually is a negative. That usually has a negative impact on the trading volume and trading value of the stock. Just again from personal perspective, from personal experience. So in my case, what I would want to do is just wait for it to continue making higher highs, and then we can talk about how we want to trade this stock if we decide to do that. But again, for those of us who are day trading, or if we're swing trading, another thing to consider is that it has very well identified trend lines and very well identified lines, kind of like a channel of resistance and channel of support. So this might be a good opportunity to buy into something and hold something for like over the period of, how many days does it usually move? Takes about 70 days. And this one usually, how long did this one take? Let's see, about 77 days. So yeah, it usually does about a 70-day turnaround for major moves. So once it starts making higher highs, then I would be more interested in doing that. So perfect. And again, if you guys have any ideas on what you want to look into, just go ahead and leave me a comment in the comment section below, and we are going to break those stocks down. AEP, we already looked into this one. AGR, that's good too. All right, not a lot of volume, just not a lot of very good stocks, very busy stocks. So we definitely would want to see something a little bit more positive. Perfect. Let's continue to scan and see if we can find something. BAP, Credit Corp, Bank. All right, sounds good. BBL, we're doing fine on this one. Nothing stands out too much. BCE, what's BCE? Telecom Services Canada. BCE. Let's check this one out. BCE is at a pretty strong resistance right now. I like the fact that they reported positive earnings. They kept reporting positive earnings overall. We have a 180-day SMA line below the 20-day SMA line, which is great. On the 3-year chart, we can see that it's approaching this very strong resistance of 180-day SMA line. Even though it has been making higher highs, I would definitely want it to trade above 180-day SMA. So let's look at a 1-year chart. Let's see what kind of trend line we can build to help ourselves out a little bit with understanding where the price trend is going. So we can see that it would be right about here. So this is a good trend line. On the but actually on a 1-year chart, we can see that the the stock price is trading above those major indicators of a support or a resistance. So in this case, it's actually pretty promising to say that the company is undervalued, even though let's see how much more room for improvement they have. So the next major resistance is going to be right here, so at $44 a share. Oh, that's almost to where the price is trading at. See, so in this case, again, I'm pretty sure that BCE, that sounds like a very popular, very big company. BCE. I definitely have heard about this one before. 6.31% in dividends. Okay, that's very, very good. We have valuation of almost $40 billion, so 39.5 billion. On max price, we have, wow, this company definitely had existed for a very long time, and the price that at which you used to trade is about, I mean, it's close to where it's trading at right now, so $45 a share with 6.31% in dividends. That sounds like a very promising investment, and what I would want to do with this one is I would definitely set up my alerts. This is a very interesting company, but I do feel like once it gets to the levels of about $44.50, then it's going to be on the overbought side, and it would just be very difficult to justify purchasing this kind of a stock just because it's overvalued from a technical perspective. So we'll set up 1 or 2 alerts. I definitely want to set up another alert that is at the level of the resistance or above, and let's look at or below this level. We had just earnings report that came out that sent the share price up significantly by, well, I guess this is a 2% change. So yeah, the company seems to be rated overvalued, and I would have to agree with this valuation just because there's not a lot of room for improvement. So that would just be my approach to this one. But BCE, very interesting. So usually whenever you stumble upon a new company, you can take advantage of the Yahoo Finance. If you're using this tool, you can definitely find some very good companies here and see which ones Yahoo Finance suggests for you. So TU, let's look at this one. Max, yeah, way overvalued, but a very good dividend percentage that I really, really like. PE ratio is not very high. That's awesome. So a lot of these companies, I'm sure that are going to be very, very appealing to us. We just need to make sure that we are taking advantage of the best deals out there. So 5-year chart, a 5-year chart. Okay, so we did see a pretty major, no, I can't even say that this was a major drop. This was about 15% drop for the company at the end of 2019, beginning of 2020. A lot of these companies seems to be doing just fine during the recession times, and even during depressions as well, relatively better than, I mean, just like real estate investment trust funds that lost 80% of their valuation. So again, if you're listening to this and if you have any ideas for the companies that you want me to discuss, just go ahead and leave a comment in the comment section, and we're going to definitely discuss those as well. So 5% in dividends, that's very good. SJR, there's definitely better potential companies out there that are still undervalued, and so we're going to continue scanning for those. Main Street Capital. This one had lost a lot of money in their valuation, so about more than 50% of the valuation. Wow. 7.17% in dividends ever since 2007. They have been paying dividends, and the price over the past, so it seems like it's approaching a very strong resistance here. So I would be hesitant on doing more of a technical analysis just because around this price level, so $31, $32 a share would be a pretty major resistance. I mean, I guess the price of the stock is currently trading above that, so it might act as a support. But again, still on the overbought side. It does seem promising to me, but again, I'm not really interested in the company that have already been able to recover majority of their lost profits. So again, another overvalued company. Again, very high dividends. That's awesome. So Stag, that's a good one. I've looked at O before. Realty Income Corporation, ticker symbol O, 4.5% in dividends. That's a pretty good big size company. So $23.32 billion valuation. That's very good. All right, WPC, let's go down. Okay, so for WPC, we definitely can see a lot of resistance at this level. So I definitely would not be the biggest fan of this one, even though it's consolidating. It seems like it's creating this new, it's about to start making higher highs, it seems like. Actually, let's look at the chart WPC. And over the past year, we can see that this is a very strong resistance right here, and it's trading above 180 and above 100 and just above 180 and 20-day SMA line, which is good. What I would want it to do is break through this major resistance and continue the uptrend. For me, this company is not as exciting because it only offers 17.9% of upward potential till the next major resistance, so I would not want to invest into this one just yet. OHI looks to be overvalued. VTP. Okay, so VTP seems to be doing, again, recovering, but approaching a very strong resistance line, so it wouldn't be very interesting for me. What is this one? I've never seen this one before. 5.52% in dividends. That's very interesting. And back in 2009, this company used to be valued at $23 a share. Wow, I just started to get a little bit tired because we couldn't find any of the companies that were able to recover properly. But this one seems to be a lot more exciting than some of the other ones that we went over today. And I'm pretty sure it hasn't been added to our list. So VNO, let's get VNO. Yeah, VNO is reminding me of MITT, so MIT. So the company used to trade at about $65 a share. It's currently trading at 38, so about 50% upward support that we potentially can see to the previous highs. We can also see about 45% till 180-day SMA on the 3-year chart. The earnings report, let's see if it had just came out or it's about to. So it's about to come out, I'm pretty sure on 16th, yep. And I'm pretty sure we're going to see a big move on this one as well. I love the idea that this company is trading above 180 and above the 20-day SMA line. We can see the MACD indicator is consolidating and somewhat pointing up. We can also see the RSI indicator that is not overbought, which is amazing too. So we definitely will follow up on this company. I really like this one. We'll do some more technical analysis on this one real quick. At or above. And we'll definitely set one up at 180-day SMA line, create an alert. At or below, create. And this would be another one. This would be a next support at or below. And we're going to make another one right here. So that's perfect. At or above. Is SNDL undervalued? We'll take a look at that one here in a second. Thank you for the comment. Let's take a look at that one in a second. So, perfect. So this is a good support line, very good trend. Support line. Let's take a look at where the next resistance. This seems to be the next resistance. It had peaked right here and in 3 other spots as well. So the way I would trade this company, it would be to break through the resistance right here, confirm it as a support, and the upward potential is very, very large, so about 66% till the price that we were at before. So we'll definitely go ahead and add VNO to our list. So VNO is a good one. Perfect. Yeah, let's go ahead and break down the SNDL. SNDL. Wow, this company is very highly manipulative. I am sure it's popping out on a lot of different scanners right now. 180-day chart seems to be way overpriced. 3-year chart, I mean, I would be hesitant to buy into something that is so volatile, and um, yeah, it just seems way too manipulated right now. So I would want to stay away from this one, especially when it comes to a long-term investing. If you're trying to scalp this one, this might be a good potential. But let's do a day trading slash scalping breakdown real quick. Let's look at a 10-day chart. So we can see a lot of consolidation at 180-day SMA line. If something in a perfect world, if this would be a 3-year chart, I would expect a lot of support at this level, and I would expect the price to continue to go up just because of this consolidation. We do have a lot of indicators like RSI indicator, MACD indicator to point up, to start to point up. But again, I would be hesitant on investing into something that that moves what 130%, actually probably even more than that, in just few days, right? So 320%. Again, if you're day trading or swing trading, there's nothing wrong with that. But again, for a long term or for a swing trade that is more of a 3-week swing trade and later and higher, right, and longer, then I would be hesitant on investing into this one. But SNDL, a good one. Super Sane Senku. Sorry if I didn't say it right, but yeah, a good company. I'm sure that there's something that acted as a catalyst on this company stock, but I would want to, for now, stay away from that one until at least I can see some sort of a improvement and continue to see higher highs on that one. All right, KIM. Let's go ahead and look at some of the other ones that have, and again, if you have any other ideas or any other companies, just don't hesitate to leave a comment, and we're going to go ahead and break those down. And I apologize if I'm like very negative about a certain company that that is being suggested. I'm just sharing my point of view on those. So let's go ahead and look at KIM. This one pays 3.5% in dividends. It's valued at $7.79 billion valuation. So that's a good one. So it's a mid cap. We can see that again, 3.55% dividends is not too much, but I would be hesitant on getting into this one just because of the trend line. You can kind of visualize it. So the peaks that it had right here are kind of coinciding with each other, and it's approaching that support, the resistance line. So I would be hesitant on investing into it right now. I would be more willing to invest into it when I see that it's come down just a little bit. So for that reason, I would stay away from that one. BXP, Boston Properties, 4.17% in dividends. That's pretty good. BXP, interesting. Yeah, this company went down to $37 a share back in 2009, and the last time when it was trading at $94 was back in 2011. The regular price for this company's stock is about $120. So with 4.17% in dividends, we would let's do more of a technical analysis on this one. What is the ticker symbol? BXP. So for BXP, we've looked into this one before. We already have alerts set up for this one. So awesome. We have a very strong support line that it had been consolidating around right now. So all I would want to do on this one is just to wait for it to start making higher highs and then trade it from there. The next resistance line is going to be 12, almost 13% higher. So again, a lot of room for improvement, especially considering the fact that the company used to trade at almost $150 a share. What do you think about AHT? It's a rate that seems like it would be great to hold for post-COVID. Hey, let's take a look at that one. I'm all about REITs. I really like real estate investor and trust funds. They pay a lot of dividends, and especially considering the current situation with low interest rates right now, I am pretty positive on those. They seem to be pretty promising for me. Wow, so this is actually very unusual. Thank you for suggesting this one. This is the first time I see REITs that kept making lower lows after this big spike back in June of 2020. Very interesting. So on a 3-year chart, actually no, this is a 1-year chart. we can see a lot of consolidation underneath of 180-day SMA line. It does seem to be promising because the RSI indicator is pointing up. We have a MACD indicator that is consolidating, and the current trading price is above the 20-day SMA, which is very nice. Let's go ahead and zoom out real quick at the 3-year chart. Okay, so this is where it gets somewhat tricky, because if you are a short-term swing trader, then this might be a pretty decent setup for you, where it's kind of creating this loop where it's about to start trading above and make higher highs, but then again, it has been making lower lows ever since 2017, 2018. Let's go ahead and look at the overall history of this company. They have to be paying very high dividend. They actually, wow, they don't pay any dividend. Interesting. It's possible they ended up cutting their dividends. I'm not sure entirely if that is the case, but again, this company was trading at about the same price. Well, actually, at $7.20 a share back in 2009. Considering the fact that it was this major support even during the financial crisis, and the price of the stock is trading below that price level right now, I would be very hesitant on buying it and holding it for a very long term, especially with price going down ever since 2014, and the company just continues to make lower lows. But I mean, obviously there was a period of time where it was able to, for a couple of years, to go up, but then again, ever since 2018, just kept making lower lows. I would be hesitant on investing into this one long term. That would be my call on this one, especially considering the fact that they do not pay dividends, and yeah, I would be hesitant on this one. It seems also very highly manipulative, because you don't see any volume at all whatsoever in this company, and then they offer, what is it, 1-to-10 split, so it's a reverse split. Reverse splits are not really positive. Like they don't act very positively for the company's valuation. So, and again, we also have the earnings report that is going to come out on the 24th of February. So I'd be hesitant on buying this one. Would the danger be to the possibility of bankruptcy? A lot of the companies that have this kind of diminishing return, and yeah, it's based on the technical analysis. You would not want to see, you would be expecting a bankruptcy, yes. But again, we don't know whether the company is going to make a deal with somebody, merge with someone, if they will become a part of, if somebody is going to pay attention to them, they will become a part of some other big company, like a mutual fund or an index fund. So I just don't really like investing into something that keeps making lower lows. So I would again stay away from that one for a while. So I was thinking of holding this until around the end of this year, seeing this is read for high in hotels, which will be more popular post-COVID. You know, that might be a good idea. The only thing that I would say is you can see that the recent pandemic and not the recession acted as a catalyst for this company to continue to go down, right? So even earlier, the stock was going down in price every single year. So even though there might be increased price and increased expectation for this company to continue to make more profit, again, I would be hesitant on holding this one or trading this one. But again, you know, if we being devil's advocate again here, let's look at the technical analysis. So we just broke through a major resistance. Wow, that's how beautiful from AMC. Yes. Oh yeah, we'll take a look at AMC real quick. But you know, that's actually I love being devil's advocate. See, I don't really like investing into companies like this, but then at the same time, let's look at a 1-year chart. We see that the company ended up spiking up by 229% after it broke through this very major multiple year resistance trend line. And again, if we continue seeing higher highs, And if you see that the company might be worth just a little bit over where it's trading at right now, maybe the valuation is going to be at $10 a share, or at least at $7 a share, then it's a 113% return. That's a great return. But again, I would want to wait and see how much money the company is going to report during their earnings report on the 25th of this month, and then take it from there. I'm actually going to set up my alerts for this one. This is a very interesting one. Let's draw a trend line as well, just to see where the company stock is going, just to make sure that we are accurate. Yeah, I mean, the setup is for a good short-term swing trade. Long-term, I would want to see more higher highs than just this period. So let's go ahead and set up our alerts real quick, and then we'll take a look at the next one. So at or actually, this one's at or above, and let's see if it's going to continue making lower lows. And right here, this is going to be our last alert, which is going to be at the very, very bottom of this. So yeah, absolutely, Simon. My pleasure. Let's take a look at AMC. Yeah, I think we'll look at the AMC during our previous conversation during our live stream. But again, we love AMC. I personally love AMC. I love the idea that it just got so much popularity. You know, everybody loves movie theaters, and I mean, majority of people. And I love the fact that the company had gotten so much attention. I'm sure they were able to pay off some of their loans and some of their kind of get themselves out there with their financial problems. But they built up a very strong support with it being confirmed 3 times over the past year, right? But again, the company had just, the stock of the company got very, very volatile. So it got very much manipulated, and for obvious reasons, right? And so it would be very difficult to justify buying it when we see such an increased volatility. The way I would trade this company, let's go ahead and look at a 1-year chart, right? So the question that I would like to ask myself when I go find stocks, right, is whether this would be the best time to buy this stock. So majority of the trading was happening at about this price level, right? So we already drew the line at $4.18 a share, where we can see a lot of resistance and a lot of support, right? So at this level, we know that a lot of people are holding the stock. So what I would want to see is I would want to see higher highs on this one. We can see extreme sell-off on MACD indicator and somewhat of a consolidation on the RSI indicator. But again, is the stock worth $5.58? If you look at a 3-year chart, and we can see the continuous diminishing marginal utility, right? Continuous diminishing returns on this one. Again, and let's be a devil's advocate on this one again. We can see that the major trend line was broken, right? So if you're a long-term investor, would it make sense for you to buy right now, or would it make sense for you to buy 10 or 20% lower or higher? This shouldn't make a difference on a multiple year hold for a position. So in this case, I would want it to start making higher highs and create this, or go down to the $4.30 per support level, and then confirm it as a support before continuing to make a move. So in this case, yeah, we like MC. We'll definitely talk about it in the future streams. But in this case, I would want to stay away from it just for the sake of a long-term swing trade. So that's just my thoughts on this. But yeah, I'm glad to see that it was finally able to break through the multiple year resistance trend line. So yeah, absolutely. So let's go ahead and actually type in AMC on Yahoo Finance, and let's take a quick look at what's suggested to us. And okay, BlackBerry, I'm sure that this one is way overvalued for BlackBerry. It is not. Interesting. All right, let's kick it back a notch, and let's look at Nokia. let's see. Yeah, so again, a company that is very well known, but continuously dropping in value ever since 2014. I would not want to invest into something that continues to bring less and less, and I would want it to continue to start making higher highs before before we see too much manipulation on the stock market of that particular company. So SNDL, yeah, so this one is another extremely highly manipulative company. So $12, $13 a share, all the way down to 15 cents a share, and then it's trading at $2 a share. Don't really like something like that. Definitely would want to find something at a better valuation. What is this? ZOM, Zomedica. Interesting. Extremely overvalued. But I'm just genuinely curious to see what acted as a catalyst. Just a couple of, it's probably just manipulation, unless some sort of news came out. So ZOM, let's take a look at that one real quick. Yeah, just way too much manipulation, way too much volume. Definitely on the overbought side. It hasn't had a chance to come down back to $1 consolidation dash support level. So we'll stay away from that one for now. Let's continue to browse through the stocks that we see, and let's see if we can find a good one. OCGN, interesting chart. OCGN, wow. Again, high volume, most likely very volatile, very manipulated stock. I don't see much. Yeah, there's not a lot of volatility, so I would not want to invest into something that had just spiked up hundreds of percent, um, thousands of percent, so 3,000% up. I'll be fine. So again, just my opinion on this one, but nothing against the company. I actually don't know anything about the company, so let's go ahead and check out one of the dividend stocks that we saw during our last stream. So OGE, energy company. So this one has a 5% dividend that they pay, and it's trading pretty low right now. So OGE. Actually, I definitely want to follow up on this one. I don't remember if I ended up taking a position on this one on Thursday, but OGE. Yeah, so we already have our alert set up. Okay, so there is a reason why I ended up not taking a position on this one, and I'll explain my justification for this one. So the company offers 5.10% in dividends. It's trading at a pretty decent floor at about $30, $31 a share. At a maximum chart, we can see that the company started paying dividends back in and existed as a company ever since 1984 as a publicly traded company. At least that's what Yahoo Finance provides for us. But my mentality on this one is that even though the company had dropped so much in value, what I would want to see as the main indicator, even for a long-term swing trade or a long-term investing, I would want this to be confirmed as a support and start to trade above 180-day SMA line. The main reason why it's so important is because there's a lot of room, there's a lot of air basically, and not a lot of support. We can see the support level that is about 8.5% lower than the next basically major support level, which would be at about 23% lower. Obviously, there's a lot of room for improvement of the company, but again, I would want to, I would definitely not want to really miss out on that profits, but I would be willing to miss out on the opportunity cost of potential upward trend over this earnings report that is going to come out on the 25th, unless again the company moves above 180-day SMA line and confirms it as a support, instead of actually taking the risks that are not necessarily unjustified for me. So again, OGE, a decent company, 5.1% in dividends. That's very good. That is very hard to beat. So again, a very good potential buy and hold. Let's go ahead and see what else we can find today. CMS. Nothing has stood out too much today besides just a few companies. So VNO and VNO was a good company that we were able to find, but I'm sure there's a lot of other companies that are way undervalued that are just getting ready for the move. So Dominion Energy, okay, yeah. If you're going through your portfolio and it happens to be a recession outside, if you can pick up some of the energy companies, some of the main companies like Dominion or Caterpillar or even Boeing company, those companies will exist for a very, very long time. And with the BA, I'm pretty sure they're recovering right now, but I think there's still room for improvement of that company. Yeah, 5-year chart, they seems to be making higher highs. So let's go ahead and review Boeing real quick. So $123 billion valuation of the company, making higher highs. Yeah, what a beautiful setup too. So the only thing that I would be hesitant about is that it's trending below this support that is going to act as a resistance trend line. So the company had reported a very low earnings amount on during the last quarter, even though that didn't act as a catalyst to drive the price below 180-day SMA line, so which is really good. So again, we have MACD indicator and the RSI indicator both pointing up. The price of the stock is trading above 180 and above the 20-day SMA line. We have confirmed. We had confirmed 180-day line as a support somewhat, but we haven't really seen the full recovery. So the recovery potential for the stock is going to be about 50%, right? So about 60% actually to the previous highs. And the next major support is going to be right at this level, which is about 14.5, almost 15% lower than the current trading price. Let's see if Boeing pays dividends. They do not. Okay. So at $210 valuation, would it make sense to buy this company right now and then potentially wait until it gets up to the previous levels of $320, $330 per share? I would say it's probably not the best time to buy this company. And the main explanation for that is there's a lot of bad news that are coming out. When we had a lot of bad news coming out here, the company was basically just dumping a lot of, and not just this company. If there's a lot of companies who do that, if something bad happens, like the actual recession happened, and a majority of the companies had started reporting all of the negative information out on the markets, which drove the price of, again, S&P 500 as well as all of the other indicators down by significant percentage, right? Real estate had lost a lot of money in their real estate investment trust funds for obvious reasons of low interest rates. But again, those companies like Boeing, who had continuous problems for years, had just dumped all of their problems right on the table. And even though the price was able to recover somewhat from the previous lows, I think there's still a lot more work that needs to be done on the company before continue the valuation higher. Another thing that I don't really like is that they ended up reporting very negative earnings report during the last quarter. So I would definitely want to see a little bit more improvement before I invest into a company like this. All right, let's see. We haven't looked at Facebook at all whatsoever for a very long time. Well, there's a reason why. The company has been growing very steadily, and good for them. Yeah, I mean, there's not really much to say. The company is way overvalued right now. P ratio is sky high, 26. Actually, another company that I really like, actually, before we go there, well, let's look at Tesla's P ratio. Tesla's PE ratio is 1,275. That is insane. It's absolutely insane. Gosh, gotta love Tesla. All right, so AT&T. So AT&T is one of the companies that I'm invested into. I really like this company. I'm waiting for it to continue to start making higher highs. Right now, they pay about 7.22% in dividends. The company's share valuation is at $28.80. this is a good price in comparison to some of the previous years that it had. We have been hovering around probably about $24 to $28 a share, a little bit higher than that. But again, when the company existed for such a long time, ever since 1985, right? So 36 almost years ago, again, based on that Yahoo Finance chart that the company had started paying their dividends and existing as a publicly traded company, it has been very steadily growing. And during the dot-com bubble in early 2000s, it had obviously dropped by a ton in their valuation. But again, considering how steadily they were able to maintain their price, and I would say that this is pretty steady in comparison to some other companies out there. 7.22% in dividend sounds actually very good. So let's go ahead and see what else is suggested to us. Coca-Cola, we looked into that one. I don't remember, is Verizon doing fine? Okay, so Verizon is at a 5-year low. Actually, what is this? A 3-year low, September 18th. So a 2-year low, 2.5-year low. Interesting. It's good. VZ. Okay, 4.63% in dividends. That's pretty good. Okay. So we've already done some charting on this company. It had created this very strong support and very strong resistance, which we had identified with the lines. Oh, this is actually a 1-year chart. That's perfect. So the way I would trade this one is once it starts making higher highs again, it seems like it's a downward looking pattern, right? It continues to make lower lows. Even though it had reported positive earnings, they were still lower than the previous ones, slightly higher than the ones before that. In this case, I would want this line to be confirmed as a support before I invest into the company, even though all of the indicators, even though the MACD indicator is actually showing us that it's somewhat of a reversal right now. I would want the price of the company to be above 20-day SMA line. So that would just be my approach. But again, just a share of information, just to share this piece of information with you guys. But definitely let me know if there are any other companies that you're interested in. We can break those down. And until then, until I see another message, I'm going to continue breaking down some of the other companies in FinWiz. So I really like using FinWiz. They have a lot of tools, a lot of charts that again can be used for free, and just kind of yeah, I can want to take advantage of this one a little bit more often than I do right now. So BIP. Yeah, so this one BIP had oh wow, interesting. So 180-day SMA line is right at the price level at which the company is trading at right now. It might be a good swing trade or a day trade for some of us who are day or swing trading out there. If you're a long-term investor, you gotta ask yourself whether this would be the best time to buy this company. It had only reported negative earnings one time, right around here. So what is this? Middle of 2020, May of 2020. We can see that it's currently at a support on this kind of like a channel we can draw a line on. And what I would want to do if I would decide to trade this company, I would definitely want to, why is it not clicking? There we go. I would want it to be confirmed as a support and start making higher highs before I buy this one. But I don't think I'm going to take a position on this one, just for simple reasons that it's way overvalued right now. If it would have been hovering around this price right here, would have made a little bit more sense. But for now, way too much downward pressure. Just again, my perspective on this one. So let's look at what else is good. BIPC. No, way too overpriced. I see British Petroleum here. We'll break down British Petroleum here in a second. BKH. Okay, so BKH is looking pretty good. We kind of see the higher highs in here. We can definitely identify a pretty strong resistance, probably at about this level right here. Let's go ahead and do a little bit more valuation before we jump into a conclusion. So what is this? Okay, so February. Okay, so this is February of 2020. So again, company ended up losing from its high valuation about 40% of their valuation of the stock. Then it was able to recover 18%. So it's still trading below 180-day SMA line, and this might act as a very strong resistance. So let's look at what is the ticker symbol? BKH. Let's look at Yahoo Finance, BKH. BKH, 3.67%. That's not bad. At a 5-year chart, it's looking pretty good too. It had its peaks, it had its valleys. Company, went public in February of '85. I don't think the chart of Yahoo Finance goes before '85, November '84. Just because I haven't been able to find anything before '84. So again, company pays pretty steady dividends. $61 on the valuation. We have short, mid, and long-term investments that are green on Yahoo Finance. Very interesting, very interesting. A beautiful graph, absolutely beautiful graph. One thing I would want to ask myself is whether this would be the best company to invest into. Do I think this is a good investment? Yes, I do think that this is a good, steady investment. But do I think that this is the best investment out of the companies that we looked at? I don't think so. I really like the appeal of the growth that it offers, and as well as the forward paying dividends. But again, we have seen a lot of real estate investment trust funds that are still paying out 10-12% a year and offer a lot more room for improvement. So just for those reasons, I'll go ahead and move on to a different and see if we can find any other companies, any other valuations. How long have you been streaming for? Where does it say that? An hour and 31 minutes. We can do another 30 minutes or so. All right, 5-year chart is looking pretty good. ALE. Let's go ahead and find something else with good valuations. This one doesn't look very appealing. Looks to be overbought. This one, Northwestern Corporation. Interesting. 4.39% in dividends. Seems to be on the overbought side. I don't think I'm very interested in that one. Let's go ahead and refresh, because I don't think Yahoo Finance really likes the fact that I'm just skipping through and creating all the cookies. All right. Somewhat good, but I don't really like this one either. So the reason for NJR to not be added to my list is, multiple reasons, but the main one is because it's approaching this main resistance, and I don't really want it, just because it doesn't really offer too much improvement. So that's just my 5 cents on that. Interesting. Okay, what is this one? National Fuel Gas Company. So ever since 2014, it's lower than the price back in 2014 and 2018, which doesn't seem to be very promising. But then again, if you're a swing trader who is trying to hold the company for a couple of weeks, it might make a lot more sense. Let's look at NJ. What is this? NFJ on Thinkorswim platform. Yeah, it's way overpriced on a, what is this, a 3-year chart, way overpriced. We have our RSI indicator that is turning red. We have MACD indicator that still shows signs of improvement, but again, last time when we had seen such a growth that kept making higher highs steadily was back in the beginning of 2020, and then the stock ended up plummeting by 40%. So don't really like this one, not too much room for improvement. So for those reasons, I will not be really looking into that one too much. What is this one? NWN. I don't think I've looked into this one before. NWN. Very interesting. It keeps making lower lows, and I'm not trying to convince myself that this is an appealing investment, but if you look at a longer term, it has been hovering around this $46 valuation at a very, very strong support ever since 2007. And then even 2008, 2009, the price went down to $40 a share, which is an awesome indicator, right? So, and we used to trade at $73 a share at a 4.15% valuation. That seems, or a 4.15% dividend payout. That seems very, very appealing to me. You know, I want to follow up on this one, even though this is a small cap stock. I had existed ever since, again, 84, right? So 1984, the company didn't go bankrupt, didn't do anything crazy from what we see based on the chart, and offering that percentage in dividends seems to be very, very appealing. Even if the company maintains this, this is way above the inflation rate, and hopefully it's going to be expected that it's going to continue to go up and not down, right? So let's go ahead and set up our alerts, and I will actually go ahead and add this company, NWN, to our list. NWN. Awesome. I love this one. I think this is actually, even though it continues making lower lows, it's trading above the 20-day SMA line, right? At or below. Let's see. Let's look. 1 year valuation. No, so it's still, well, on the 1 year chart, yes, it is. But again, we have this 180-day SMA line, which is going to definitely act as a resistance just because it had done that before. I would want the 20-day SMA line to be above 180, and I would definitely want the price of the stock to be above 180 and be confirming that as a support before I invest into the company. But I really like the fact that this was identified as a very, very strong support, and the current price of the stock is above 6% above that support level. So I'm going to again make a comment for myself that this is a potential buy, and to be on the lookout. And again, if you guys have any ideas on some of the companies that you are interested in, don't hesitate to leave me in a comment, and we are going to review those. I'll be more than happy to do that, as well as don't forget to like the video if you do enjoy and find value in this. So we're definitely going to continue doing this on a regular basis, and I'm pretty sure we will have time to stream tomorrow, so maybe we'll have another one during the President's Day tomorrow as well. All right, let's go ahead and set up our alerts. Create an alert at or below, and we'll definitely set up one that is below the current support at or below again. Boom. Then we have create an alert at or above, and again, nice, create at or above. Perfect. That's awesome. So NWN, I think that might just be one of my favorite ones just because of the potential that it offers. I hate how it kept making lower lows, but the fact that it had consolidated and made this line right here that we ended up drawing as a support line multiple times, and it's a good indicator for me. Okay, so let's look at the earnings report. So they were positive even here when the company was consolidating, and actually it dropped without any sort of earnings report, so that's not a good sign. We have a 17 cents, negative 17 cents that they're reporting on their earnings report, and negative 61 right here. Let's go ahead and go to Yahoo Finance and see what it's expected. Okay, so they're expecting to report $1.49 a share of earnings, which is really good. Let's take a look at their 3-year chart. 173 negative. Okay, so October, this was negative. We have positive. Yeah, so they have a lot of growth during their positive earnings report. So we would definitely want to be on the lookout for this one, because the next major resistance is going to be 11%, almost 12% up, and then we have 34% up until the next resistance of 180-day SMA. We can see the MACD indicator is looking good. Both of the indicators are pointing up, both of the arms of the indicator, and then we also see that the RSI indicator is right in the middle, which is a good sign as well. So not overbought, not oversold. So that's awesome. This is a good one. Honestly, if we end the stream on just the note where we found this one company, I'm content. For 4% in dividends, that's good. I'm gonna also again make myself a note about 4% dividends. Sweet. All right. So we were able to find 2 so far. So it's VNO and NWN that are offering the most potential for growth. So those are just the companies that seem to be pretty appealing. And let's go ahead and see. So we're going to probably continue our stream for another 20-30 minutes and see if we can find something else. JJSF, no. I think there's a little bit of lag going on with the internet right now, but I don't think it's going to last too long. APAR. Yeah, so this one, the 5-year chart, it's on the overbought side, only 1.45% in dividends. Johnson & Johnson definitely recovered very well. Actually, J&J Snack Food Corporation, not Johnson & Johnson. Why did I say that? Let's look at this one. No, definitely on the overbought side. Matthews International Corporation, 2.54% in dividends, finally broke through the trend line of a resistance. Doesn't seem to be very appealing to me, so I don't think I'm going to continue looking to that one. This one is way overbought, and I feel like we're circling around. Let's look at 2 more on this side, and then if we don't see anything, we're just going to go to FinWiz. And United Bank shares. Let's see what this one does. This one 4% in dividends seems to be overbought on the maximum chart. I'm not very interested in that one, so we're going to go ahead and do FinWiz and see if we can find something different. Yes, okay, so let's look at British Petroleum. We wanted to look into that one about 40 minutes ago. So British Petroleum, we had identified a head and shoulders pattern right here. So this is kind of the expectation of what the stock is going to do based on the previous analysis. And in this case, what we would want to do is we would want to see higher highs and for it to break through around a $22 a share price valuation. And the reason why I say that is because we see a lot of resistance at this level right here. So we can see a lot of support being built up by the company's price shares at this time frame. But then again, it's acting as a very strong resistance. It had done this right here, and it had done this right here as well. So we would want to see what exactly is going to happen with it. We'll do the follow-ups. We have one alert that is a little bit too high than I expected that I would want it to be. So we'll set another one up right there. Actually, it's probably because we are on a different chart. There we go. And we're going to set up another one that is at the previous support level as well. So create alert at or below, create. Perfect. I love this. This is good. So yeah, let's before we move on to a different one, let's look at what BP offers as a dividend. I believe they should offer dividends. I know that they do, but I don't know if they removed it or not. I think Yahoo Finance for a while was saying that they do not pay dividends, BP. Yeah, so Yahoo Finance says that they do not pay any dividends right now. I would want to follow up on this one, just see what exactly is happening, because 0.04 cents or negative 0.01 cents on a dollar, those are not earnings. So that's barely anything. Maybe that's why. Maybe there's something that had changed, or the company hasn't changed their expectation just yet. So we'll definitely be following up on this one in the future. But I do like investing into BP just because it offers a very long term investing potential. Over a 1-year chart, we can see that it had lost. Actually, is this a 3-year chart or a 1-year chart? Let's see. 2020, yes, this is 1-year chart. It had lost about 50% of its valuation. It was able to recover about 30-40%, not from the previous price, but from its lows, which is nice. And while we are at the 1 year chart, we can see that the MACD indicator is pointing up, slightly up. So we would want the blue one, so the 20-day SMA, to be above the yellow arm of the MACD. And then we also have the RSI indicator that is pointing up, which is awesome too. So very promising, very, very promising for the company. We'll see what's going to happen to it next. I think I just saw a company that I want to check out with an interesting chart. I want to skip any. So BP is looking pretty good. This one probably had a reverse split, or maybe just something acted as a catalyst for it to go up that much higher. This one, no. Let's look at this one right here. BTG continues to make lower lows. I'm not very interested in this one unless, and again, the earnings report is coming out. When does it come out? Just on the 24th of February. This might act as a catalyst for the company's share price to continue to go down and continue making a lower low. So I would not want to risk this, even if I am a long-term position interested in. So and again, this was able to find a little bit of support just like it did right here. But again, there's a lot more air until the next major support, which is going to be below 180-day SMA line, which is about 34-35% lower than the current trading price. So those are just my 5 cents on that. Let's see what else. BTG, no, again, looked into that one. And again, if you guys have any questions about any of the companies that we're looking at, or if you have any other ideas or any other companies that you want me to look at, don't hesitate to leave me a comment. We go live every Sunday at 7 p.m. and we'll try to do more live streams on this channel as well. So CAH. Interesting. A lot of volume, which is really good. This is a very good, I think, company for day trading and swing trading overall, like a short-term swing trading. We have a lot of support at this level, at a level of $45 a share. We do have the price that is currently trading above 180-day SMA line. It is looking down on MACD and RSI indicators, most likely due to the earnings report that just recently came out. So the people took their profit and just left and sold. So I wouldn't say that this stock is highly manipulated per se, but it is extremely volatile. That's why I was saying that it would make more sense if you're a day trader or a swing trader to take advantage of the prices like these. So we're going to go ahead and draw this just very promising-ish resistance line, right? Resistance trend line. And we'll see whether the company is going to continue acting, using that line as a resistance. So very interesting though. CAH, I want to look at CAH and see how long this company had existed and was publicly traded. Let's look at the max chart real quick. Wow, yeah, ever since, again, 85, I'm sure there was it existed even earlier than that. So so it definitely builds up a very strong floor at about this price level back in 2018, and before the time when it was trading at the same level as 2013 and 2008. So yeah, we can definitely see that there is a strong resistance, a strong support line at about $43 a share for the company. But again, I'd be hesitant on investing into something like this, especially when it continues making lower lows and we don't have any dividends. So again, those are just my position on this. So 1.68% in dividends for this one. This company also seems to be way overvalued. I'm very interested in this one. Overvalued. Just click on random ticker symbols. Cool. And this is exactly what happens when we look at the ticker symbols like this. So what is this company? AHH. This is another company that seems to be very hurt ever since the Rona happened. So all the way up from $19 dropped all the way down to $8, so lost about 55% of its price. It currently is trading above 20-day SMA line. and had just recently broken through a multiple month resistance, which was identified right here. That is perfect, and it had confirmed it as a support. It had confirmed the 20-day SMA as a support as well on a 3-year chart. Let's look at a 1-year chart. That's fantastic too. So we also confirmed that as a very strong support and a very strong resistance, right? The company had dipped below this very strong multiple month resistance, and now it's trading above that. We have both of the indicators, RSI and MACD, on the upper level of their chart, right? So slightly, I wouldn't even say actually that it's oversold on the RSI. It's at 60, 62 points, so I wouldn't say that this is way too overpriced. MACD seems to be pretty promising too, and again, we have a lot more room for improvement, above 40% to the previous highs. And let's look at what the 180-day chart looks like. That's pretty good. Again, 180-day SMA is looking pretty good. And the next resistance is probably going to be at this level right here, where a lot of consolidation we were able to see back in 2018, February of 2018. And let's see how much more room. We have about 15% of upward potential for the company, and we also have about 5 or 6%, 6.5% of downward pressure on the company. Let's look at and see if they just, okay, so they just reported their earnings, so that's good too. And let's go ahead and set up our alerts. I like this company. This seems like it's offering some potential for growth as well. So at or above, and let's go ahead and set up one at or below. That's good. And at or below, perfect. And we're going to set up another one that is closer to here, at or above. That's perfect. Okay, that's awesome. So 5% in dividends. Company used to trade at about the same level back in 2016. So it went public back in 2013, at least according to Yahoo Finance again. And 5% in dividends, that's not too bad. I don't think I would be interested in buying this stock right now, just because it seems to be slightly more on the overbought side for me. I would want it to come down just a little bit and confirm this as a longer term resistance, or support, I should say. But that's good. 5% in dividends. It's very difficult to beat that. I think I would rate this company probably about 7 out of 10. So this is good. This was a good find. I'm happy. Very content. Actually, let's go back and see what else we can find out of the suggested list out of these companies. Nothing major, nothing good. AGD, what is this one? AGD, 100. Okay, so it's a very small cap stock. Has been trading at about the same level for a very long time. Just waiting to explode. Just waiting to explode. I would want to stay away from that one. Just not very appealing to me. AFB at a very strong resistance right now. Definitely would not be very interested in buying this one, even with 4.43% in dividends. If the company's price would have been trading at about $12 a share, where we can see a lot of support, multiple year support, completely different story. Would have definitely been very, very interested. Would have definitely spent more time looking into this one. But for now, even if the company goes down by those $2, that's about 14-15% drop. I would not be very happy, because a 15% drop, it would take 3 years for the company to catch up with the dividends. So not a very not the best time to buy. Let's see what else we can do. Charts, conversation statistics, no. Year to date, 1 year, 5 years, no. Nothing seems to be standing out too much. And again, if we have any other companies that you guys are interested in, just let me know, and we can take a look at those. But for now, let's go back to our screener. CMS. Okay, interesting. So this company, let's see how much more potential for growth. About 20%. I mean, it's not too bad, but no, I don't really like this one. It ended up going below 180-day SMA line on a 3-year chart, and the 20-day SMA line is very steeply going down. Both of the indicators are still pointing down, except the RSI indicator seems to show a little bit more consolidation. But again, if we zoom in a little bit on this one, then this might be acting as a very strong resistance since it dipped below, and we can see a red candle that is slightly below the 180-day SMA line on a 3-year chart. So again, not the best setup that I would want to see for this company in order to invest into it. So let's continue looking into something different. CWEN. Okay, that seems to be offering some room for improvement, but again, more on the overbought side. I love the fact that it has this very, very strong multiple year trend. But again, if we draw this line, we can see that it actually dipped below this trend, and now it might act as a very strong resistance. And another reason why it would act as a resistance is because our 20-day SMA line is approaching the very top of the very last green candle we had. So in this case, even though our RSI indicator is looking pretty good, even though our MACD indicator is pretty promising, it seems like it's about to cross the yellow arm of the MACD indicator. I would want definitely to see this stock to be trading above the red line, which is again a very strong multiple year resistance line. So definitely dipped way too low. I wonder why. Maybe something acted as a catalyst for this one. Some sort of news that came out. Dominion Energy, we looked into that one before. Did we say no to Dominion Energy? Like Dominion Energy might always survive. We have support at a previous level right around here. Let's look at a 3-year chart. Let's look at a multiple year chart real quick. Oh, and right here. Oh, no, not Zillow. But that would be nice to look at Zillow real quick. 5-year chart, way too overpriced. Nice. Okay, Dominion Energy. Why did it not choose? All right, well, silly. All right, Dominion Energy. Finally, let's look at this one. 3.51% in dividends. That's not bad. We have. Okay, yeah. So the reason why we end up not using this one as a good investment company is because it's on the overbought side across multiple different years. So it's a very good company overall to invest into very long term, but I think in comparison to some of the other REITs or even airline companies, from a technical perspective, this is not as good. But again, Dominion Energy is doing way better during a recession than any of those companies that we discussed earlier during the stream. All right, let's do a few more, and we'll wrap this up in about 5 minutes, and we'll continue doing our streams throughout the week. ELP. Okay. We do have some volume, which is nice. We have earnings report that is going to be coming out in a couple of weeks, next month actually, so that's good. Let's draw a better trend line. No, probably about right here, right? So this would be the trend line that we have going on right now. The company is trading above 180-day SMA line. It seems to be forming up this arm that is pointing up, but again, we have RSI indicator and MACD indicator that are pointing down, both of them. So again, would it be the best time to buy this company? In order to say yes, I would definitely want it to be confirmed as a support before I decide to invest into something like that. So for those reasons, I would move on to a different one. Sweet, ETR. Let's look at that one. ETR. Okay, I believe, yeah, so we definitely looked into this one before. Pretty sure my justification for not really investing into this one is because of the earnings report that is coming out soon. We still have MACD indicator that's pointing down. We have RSI indicator at a good spot, but I would want to see more higher highs. So it's just because the price, the very last candle is still down from where it closed the day before. Even though it's trading at a very strong multiple month support, I would definitely want it to go above 180-day SMA line to feel a little bit more safer, even with my long-term investment. So that would just be my approach to trade that one. EVRG. Let's look at this one. EVRG. Very interesting chart. We have a very strong support. That's good. We also have another very strong resistance right around this level, I would say, actually. And it seems like it's trading above this resistance line and above 100, and I guess I should say above the multiple month support line. Let's go ahead and zoom into 1 year. Okay, so we have this 180-day SMA line that had acted as a resistance throughout multiple different weeks, and I would definitely be very hesitant on buying into something that is approaching this level. So definitely would want it to be up above 180. I would definitely want it to confirm that as a support, and then for it to continue to go up, because again, this had happened where the price of the stock ended up skyrocketing. People probably jumped into the position just because it finally broke through the multiple week, multiple month resistance, but then it ended up going right back down to where it was before and continued to go down to the next resistance. So to the next support, I should say. But again, this is these are just my 5 cents on this company. Again, make sure to do your own due diligence. And again, we're definitely going to follow up on this one. I like this setup, and I definitely want to see how it's going to turn out. From my perspective, it seems to be more promising than, so more bullish than bearish. So we'll definitely look into this one a bit later. So create our alerts as we normally do. And on this note, I will go ahead and update the chat with the stocks that we ended up buying. I'll do that again. Instead, actually, not the stocks that we ended up buying, the ones that we identified. So VNO and NWN. So VNO and WN. Those are the companies that undervalued from today. Awesome. So in this case, thank you for watching. I appreciate you guys, and don't forget to smash the like button below, subscribe for more, and we'll see how this YouTube channel grows. I hope you enjoyed this video, and I will definitely see you in the next one.